Good morning, everybody. It is your daily crypto news for Wednesday, November 1st, 2023. Let's get straight into the news. The United States Securities and Exchange Commissioner Chair, Gary Gensler, he has jokes and he wished everybody a happy Bitcoin white paper birthday yesterday by tweeting, "If Satoshi Nakamoto went as Satoshi Nakamoto for Halloween, would we be able to tell? Probably not, Gary." And that's actually pretty funny. Happy 15th birthday, he continues, to Satoshi's famous white paper that started crypto. Any crypto companies that are tricking investors should start treating them to compliance with security laws. I think that's actually pretty good. But as we know, entrepreneurs and lawmakers have both criticized Gensler for not being clear enough with the rules. They argue that he is regulated by enforcement and is driving innovation overseas. Gensler responds to that criticism, saying that the rules are already clear enough. They're called securities regulation. Again, a zinger. He's also argued that the United States has enough digital currency and the industry is built on non-compliance. Amir Bruno Elmani, aka Bruno Brock, somebody I've never heard of before until now, but apparently he's the founder of blockchain protocol Oyster Pearl, and he's been handed a 4-year jail term for tax offenses by the DOJ. He was also sentenced to 1 year supervised release in order to pay a restitution of $5.5 million. Apparently, he used a coin mixer to conceal the true destination of cryptocurrencies on the blockchain before transferring funds to family members and friends, and then himself, according to the DOJ. He made millions of dollars from an initial coin offering, or an ICO, of its Pearl token, PRL is the ticker. But instead of reporting the income of sales, he falsified his tax returns and then used $10 million in proceeds to buy multiple yachts where he stored gold bars, he bought real estate, and he also did home renovations. He said in the trial, "I stated in public forums that after the ICO, the supply of Pearl token would not increase, and that the smart contracts that created the Pearl token would be locked. Both were false. The smart contracts weren't locked, which allowed him to mint more Pearl token. The supply increased, which he then benefited." Which makes me wonder, why is he only getting sentenced for tax evasion? It sounds like fraud to me. There's an epidemic of clickbait headlines to get you into an article that has a headline that gets you into an article that doesn't have anything to do with either the clickbait or the headline to make you start reading the article. They don't even want you to read the article, I don't think. They just want you to click and then stay there for a couple seconds. Here's another example. Stablecoins outperform Bitcoin and Ethereum thanks to peer-to-peer transfers and protect against unstable currencies. The article states, and it took me a while to get through this because I didn't know where it was going, but it actually makes a very good point. Bitcoin's lack of speed and scalability hurts its case for being a good replacement for money. We know that, and that's why the narrative was dropped years ago, and we call it a store of value. They also said in this article that Ethereum has become the programmable decentralized system, paving the way for an ecosystem of NFTs, Web3 applications, and DeFi. This is true, but they're both volatile. And that's why this article is pointing at stablecoins. And they say that it's presenting the clearest prospective templates for tokenization today. And this is according to Coinbase's research paper. They think that stablecoin liquidity could be one of the clearest ways that tokenization intersects with the broader crypto economy as part of the next market cycle. They continue to say, "We get the first true mass adoption of a token, and we unleash the next great wave of growth in the entire crypto ecosystem, as consumers can focus on the value of the products and the services within the crypto ecosystem instead of the tokens issued by those projects." And now this is very important. What they're saying right now is like there's products and services that are being made right now by projects, but we're too focused on the price of the token. The token is basically the facilitator of this product and service in the crypto space, either to pay gas, either to be a transactional between some product or service to the customer. And the product or service could be really good and really worth it one day, and then not really worth it the next because the price is adjusting all the time because of the volatility. So what they're implying here is like, why hasn't an Ethereum ecosystem been made on the back of a stablecoin? USDC, for example. Build everything that you want to and focus on the products and the service while you have a stable asset to conduct business with. Pay the gas fee, do the transaction, facilitate some sort of communication, governance, DeFi, NFTs, but do it with something that's stable and not volatile. And so I think that's a great idea and actually a really good point. Too bad it took me like 3 or 4 clicks just to get to that point. And finally, the Bitcoin price predictions are going crazy. Bitcoin could hit $150,000 by 2025, says formerly bearish Wall Street firm Bernstein. Well, Changelly also put out their predictions, and I just want to show you these really quick. They're talking about like 2023 $37,000 maximum price Bitcoin. That's this year. Next year, they're saying a maximum price of Bitcoin of $55,000. 2025, we have $75,000. By 2026, we're talking about $112,000. But the interesting thing is, they're talking about in 2032, $1.1 million Bitcoin. Now, just to put this into perspective, to have $1.1 million Bitcoin, we're talking about a $19.5, $20 trillion market cap. Gold is sitting at $13 trillion. So we're talking about $6 trillion more than gold. The S&P 500 is sitting at around a $35 trillion market cap. So we're talking about more than half of the S&P 500. We're talking that Bitcoin will be the most valuable asset in 2032. It's going to be bigger than BlackRock. BlackRock controls funds of around $10 trillion. BlackRock Fidelity doesn't even have as much as they're predicting Bitcoin to have in market cap by 2032. For Bitcoin to go from what it is now to that would be unprecedented. The amount of wealth transfer, the amount of wealth going into Bitcoin would have never been seen before in the history of the world. I'm not saying that it's impossible. I am saying, though, it's very improbable. I see that Bitcoin can hit around $5-6 trillion. That would still be a couple $100,000 market cap. To go to $1 million would be insane. Now, I just want to tell you this in the predictions. Now, again, this is not financial advice. This is just my kind of like, spitballing right here. What I am saying is, like, when people tell you that $1 million Bitcoin, really just look at how practical it is. That it's not impossible, but it's probably improbable. And that anywhere between now and $1 million Bitcoin is still going up in price. And there's a lot of different, levels that you can hit, targets that we can hit, that is still moving the Bitcoin price up and forward, and the adoption forward as either a store of value or even some kind of use of money. But don't get hyped up and don't get wrapped up in these outrageous prices, because for that to happen, it would be unprecedented. Anyway, I hope you enjoyed today's crypto news. I hope you have a great weekend. And until tomorrow, happy hodling, everyone.